Good morning, sir, class. Um, this is the screencast for chapter 12, problem 3. I'm Cadet Jovan and I'll be explaining you this problem set today. So the problem given to us says for each of the following transactions reported on a statement of cash flows, indicate whether it would appear in the operating activities section, in the investing activities section, or in the financing activities section. Put an S in the blank if the transaction does not affect cash but is reported in a supplemental schedule of non-cash activities. Assume that the company uses the indirect method in the operating activities section. Provide an explanation for why you have classified the activity as you have. So there are a bunch of activities given, and now we have to classify them into one of the three categories in the cash statement flow. So some of the key terms that we need to know for this problem. First of all, operating activities. So operating activities are activities concerned with the acquisition and sale of products and services. Includes cash receipts from goods sold, payments to employees, taxes, collection from customers, and payment to suppliers. These activities can be found on a company's financial statements and in particular the income statement and cash flow statement. So all the activities that are related with the selling or buying of goods is called operating activities. Investing activities. Activities concerned with the acquisition and disposal of long-term assets, replacing worn-out plant and equipment, and expanding the existing base of long-term assets are essential to all businesses. So to run a business, we need long-term assets like equipment, buildings, and other stuff. So all these acquisitions and the disposal, that means to get rid of those items, are part of investing activities. So say for example, if you're done with our business and now we are trying to get rid of a building or of a equipment that is a long-term asset, then it should be part of investing activities. Financing activities. Activities concerned with the raising and repaying of funds in the form of debt and equity. Financing activities are transactions with creditors or investors used to fund either company operations or expansions. So all the activities that are related with the creditors or the investors who are investing in the company to raise fund or to repay the fund that we have collected from them to run our business are part of these financing activities. One of the example is issuing bond. Statement of cash flow. A financial statement that shows how changes in balance sheet, accounts, and income affect cash and cash equivalents and breaks the analysis down to operating, investing, and financing activities. So a cash flow statement only includes the items where it affects the cash or cash equivalents. To mention here, say for example, accounts receivable or the money related with credit terms are not part of the cash flow statement. Indirect method. A method used to generate cash flow statement that uses increases and decreases in balance sheet line items to modify the operating section of the cash flow statement from the accrual method to cash method of accounting. So indirect method is one of the two methods that operates under that operates to prepare the cash flow statement. So the way it works, it converts the accounting items from accrual method to cash method. Say for example, we have accounts receivable of $5,000, and if we receive the accounts receivable into cash, then it is converted from accounts receivable that was in accrual terms to cash of $5,000. So we are converting the accounts receivable to cash, and so that is an example of an indirect method. So the first thing that was given to us is a company purchases its own common stock in the open market and immediately retires it. So the key term here is common stock. As we know from the definition of financing activities is that activities concerned with raising and repaying of funds. So common stock and funds that are related. So we can easily say that this is financing activity. The second one is a company issues preferred stock in exchange for land. So here we can see that the stock is the key term here, which might make you think that it should be a financing activity, but it says that in exchange for land. So you're getting that stock in exchange of giving away your land. So there shouldn't be any transaction. That means it's gonna get neutralized. So it should be S or no change. The third one is a 6-month bank loan is obtained. So as the definition goes, that raising or repaying of funds. So 6-month bank loan, that's like raising fund to run the business. So that should be financing activity. The fourth one is 20-year bonds are issued. So I have given one example in the financing activities that issuing bonds is financing activities because it's like raising fund for running the business. So this should be a financing activity. A customer's open account is collected. So if you can remember during the definition of operating activities, I said that collection from customers is also part of operating activities because to run the business, you are collecting these accounts and converting them into cash. So that's part of the cash statement flow, cash flow statement. And since you're collecting it in cash, so it should be operating activities. Income taxes are paid. So income tax expense is part of the income statement, and those are related with running our business day to day. So that should be part of the operating activities. Cash sales for the day are recorded. So it's the same as the last two. This transaction or this activity is concerned with the acquisition or sale of products. So this should be operating activity. Cash dividends are declared and paid. So cash dividends, we know that dividends are the share of our stockholders. So these are related to the activity concerned with the repaying of the funds that we have collected from our creditors. So this should be part of financing activity. A creditor is given shares of common stock in the company in return for cancellation of a long-term loan. So the key term here to notice again is common stock, which is related to our funds, but you should also keep in mind about this line, cancellation of a long-term loan. So you are giving share to someone, but in regards to that, you are also canceling a long-term loan. So there shouldn't be any change here. It should be no change. Then a new piece of machinery is acquired for cash. So for this one, we said that investing activity is concerned with acquisition of long-term assets. So machinery is a long-term asset and we are acquiring it for cash. So that should be investing activity. Stock of another company is acquired as an investment. The key term to remember here is stock, but also investment. So you are acquiring a stock that can make you think that it should be financing, but it says here directly that it's an investment. So this should be investing activity. Interest is paid on a bank loan. This is also part of the operating activity because it is concerned with the acquisition and sale of products, because when running a business or selling of products, you need to pay your loan and interest. So that should be operating activity. Factory workers are paid. This is also wage expense for your factory workers, and you need to pay your factory workers to run your business. So this should be operating activity. So that was all from me for this problem. Hope you guys enjoyed it. Thank you.